What up, Hyperchange? Welcome to another episode. It's earnings season. That means your favorite companies are reporting their financial results. So I'm going to show you guys a tool that I use to analyze all my favorite companies' financials. And we're going to analyze two of the most requested companies that you guys have been asking me about, Square and Twitter. So what I'm talking about is HyperCharts. It's a software financial data visualization platform that I developed about a year and a half ago in partnership with Mo. He's an amazing developer, Hyperchange subscriber. So now he's kind of ran with it. He's the CEO of this project, and it's been expanding like crazy. We started with 5 companies. Now we have over 100, adding a bunch of new features. With this, essentially the concept is it's always what I wish would have existed in the financial world, which is turning hundreds of pages of super complex financial documents and SEC filings into very easy to understand charts to make your financial analysis easier and simpler. This tool saves me hours of time every week. So let's dive into it. So welcome to the world of HyperCharts here. This is the homepage. Pretty simple. I think of it as sort of like a, very simplified, streamlined version of the Bloomberg terminal, which can cost you, 40 grand for this crazy setup. This is basically free, or you can pay for premium and get $10 a month, and we'll get into that. So I'm logged into my account here. You can see I've favorited my favorite companies. Let's jump into Square. I've been getting a ton of requests about this. They recently reported their financial results. So as you can see with every company, we start out, and this is a very important and intentional design thing, the financials. Every other stock app, every other stock thing is all about stock price. What's the price? What's the price? What's the chart? To me, that is way less important than what are the actual financial metrics of the business. And this is a very intentional design thing. And the point of HyperCharts is to help you do fundamental financial research. And I think that's a huge problem with the stock market is most people who own a stock couldn't tell you what the financials of that company look like. I know a lot of you watching probably can, but most people can't. And that's so frustrating for me. And so I think it's amazing the way we design this, what you should care about. Like, you should be able to value your company without even looking at the stock price ever. Like, I think I read this from Warren Buffett. You should be able to read the report or go to HyperCharts, just look at the financial data and, know that business, know that product and say, this is the price I'd pay for that business. And then go check the stock price. And if it's below that price, you can buy it. But anyway, getting a little sidetracked. So this is Square. We start out with custom KPIs, key performance indicators for each company if they have them. So not just the financials to start, but like key metrics that will tell you about their business. For Square, gross payment volume, essentially how much payments are taking place on those, Square terminals, how many people are swiping their credit cards. This is a great proxy for how much money is moving through the Square ecosystem and how that ecosystem is growing. So Square discloses this every quarter. As you can see, there's a bit of a pattern to it where it kind of spikes in the summer months and then comes down here. So this is what it was, 25.7 billion. And I believe you might be like, oh, that came down. Was that due to illness 19? Well, it was actually up from Q1 2019. And I think that's always something very important that HyperCharts has really helped me illustrate is the seasonality of so many companies. Many companies, Q4 is super strong. In Tesla's case, Q1 is super weak. For Square, Q2 and Q3 are super strong. And Q4 is super strong. Q1 is weak. So each company is a little different depending on their business model, and these trends are really easy to see, kind of how it cascades in HyperCharts. So now we have revenue segments. What are the sources of revenue that the business has coming in? Square makes most of its money here on transactions, this blue piece. And those are literally just when you swipe your credit card, Square takes a cut of every one of those transactions, makes a little bit of money on every single swipe. The next piece of the business here is software and subscriptions. That red indicator here, this has been an explosive piece of Square's business. So this includes software services, like I think they have like payroll management, a bunch of sort of upselling, premium software products to these merchants in the with the payment terminal ecosystem. The big other side of this revenue line item for Square is Cash App. And to me, Cash App is the most exciting part of the business, a digital financial bank. I think Cash App has incredible potential. I made a whole video valuing Cash App at 10 to 15 billion, diving deep there if you want to check that out. But Cash App is what is really driving the subscription and services revenue here, part of Square. And then if we unpack another layer here, hardware, we can zoom in on that briefly. Hardware is actually selling those payment terminals. Square did see nice growth in that business as well, year over year. So every single one of their businesses was growing despite COVID, which I thought was pretty interesting. If we zoom in here on Bitcoin, this was incredible. Bitcoin did over 300 million in revenue in Q1 for Square, up from just 65 million in Q1 2019. This has been explosive growth. Although if you dive deep in their financials, the actual profitability of this revenue isn't that strong, but this just shows you how big of a business Bitcoin trading has become for Square, and that all takes place on the Cash App platform. So overall, we did see Square grow revenue, another quarter of record revenue, but if we take out Bitcoin, it was the first time Square didn't sequentially grow revenue since Q2 2016. So this is just to illustrate the power of HyperCharts, just the way we're able to take that out and show you here that literally declined for the first time ever. There is always very slow growth into Q1 because of that seasonality, but we've never seen a decline. So this shows you Square was stopping charging sellers some of those SaaS fees for subscription revenue, that transactions were way down as people started to close in March. And so I think this is just going to get uglier before it gets better. Now, if we go to revenue and operating income, this is the first like bread and butter chart that every company is going to have. Revenue, how much money did they bring in? Gross profit, what was the profitability of that revenue after the cost of goods sold? And then operating income after taking into account R&D, selling and general administrative expenses. What's the actual core operating profit of that business? And so as you can see, Square here, or let's just start with revenue. Record every single quarter, awesome, but Bitcoin's been driving a lot of that. Gross profit also been growing very strongly as well. The gross margin's going up as well. We're going to get to that in a second. Operating income, though, took a huge hit in Q1 as they forgave some of these fees. The sellers dropped off. And so I think this is going to get much worse. But Square, which was sort of going from losing money to making money, immediately had that reversal because of illness 19. So I think that's 100% due to that impact. We can go to net income on a GAAP basis. This was sort of a one-time thing, so I think that's why that looks spiky. Gross margin over time, though, Square did a super strong job. And this has been a fascinating transition to watch as they go from just payments, 33.4% gross margin, 39% gross margin. They've steadily been increasing their gross margin overall as a company as they layer in more high value services and not just these transaction related fees. So this is a very strong trend going in Square's favor. Additionally, in terms of revenue growth, I love this chart for Square. So, and just on HyperCharts in general, 44% year over year revenue growth. They did divest Caviar, so even without that, it would have been a little bit faster. So pretty insane revenue growth, but expenses turbocharged to 50% growth, and that's why we saw the profitability get hit. So this is a really nice chart to see whether your expenses or revenue is growing faster, and you can even take out operating expenses, just focus on revenue if you want. I don't know. I'm personally thinking that Square's growth rate is going to go off of a cliff in Q2 because of this illness 19. But if they can stay positive at all, I think that's going to be a really, really good sign. And so here we have the outstanding share count. How many shares are there outstanding? Very useful to see how the trajectory of this is unfolding. Square, growth company, paying people in stock. They're going to be consistently diluting. That's why we're seeing this outstanding share count go up. Not a big fan of this dilution, but that is what it is for a lot of growth, not super profitable companies. Market cap over time, as you can see, Square has been crushing it. And then you have the revenue multiple over time, starting to get into valuation metrics for the company. Square, which was originally here down in the dumps, traded like, oh, they're just doing processing payments. There's no profitability to this revenue, towards people are trading them at 2 times sales, towards wait, Square is worth 9-10 times sales because this is the bank of the future. This is super high profitable margin revenue. Their gross margins are going up. Now we sort of had this normalization back to 5 or 6 times revenue. So I think this is interesting to see how the market's thought process of what Square's doing has changed over time. But anyway, so this is a look under the hood at Square's financials. We update this every single quarter. If you want to get deeper into this is a super useful feature we've added as well. Go to the overview page. We aggregate news here, CEO, little description. But if you want to get into the core nitty-gritty SEC filings, you can click this, or we can just go to investor relations site of Square. It'll take us immediately there, and this is integrated for pretty much every company on HyperCharts. We can go here if we want to dive deep into that shareholder letter, get our hands dirty with more of this research. It's right here, linked to you right away. You don't even need to go to Google. All done on HyperCharts, and this is Square's Q1 letter, so that's super useful. Now let's go check out Twitter, because this is another interesting one. Twitter to me has been totally turning around, and they've gone from actually, one other thing I wanted to note about HyperCharts that we've changed is this sidebar situation. I love this change. It used to be up here was the menu, but now we've added this sidebar as we've expanded over 100 companies now, and we keep adding more. This is a better system to allow you to have more favorites, interact with more companies easier. So really love that new menu redesign. But anyway, Twitter, their key KPI, monetizable daily active usage, how many people are on the platform, huge bump, pretty much an acceleration of growth. This is fascinating that we've seen every sort of, the digitization of society really accelerate with COVID. And now we see, that user growth of Facebook, of Snapchat, of Twitter is benefiting because of this. So usage is going up, and, even the US, we're seeing a similar trend here. But what's fascinating is the revenue is not following because advertising prices are collapsing. at first I was like, why are my YouTube earnings going down? I'm still making as many videos, still getting as much views. Well, the advertising market, one of the first things people cut in spending to tighten their budget, cut costs, is advertising and marketing expenses. And, that means advertising on Twitter, on YouTube, on Facebook. And so the CPM, cost per impressions on those platforms, is crumbling. And so even though usage is up, engagement is up, the demand for advertising on that platform relative to the supply is kind of an imbalance. And so that has caused a little bit of stress on the financials. I think these will bounce back as the advertising market bounce back, but that's interesting to consider. So here's Twitter's revenue by geography. Once again, a chart is worth 1,000 numbers. Just the way you can see how, wow, Twitter has a huge international user base. They're monetizing way less than their US user base. US, we're talking 33 million users versus 133 million, but revenue-wise, the US is doing 468 versus 339. Way more revenue despite having like a quarter of the users. This shows you this is pretty much the same and norm for every social network. They're making way more money in the US and North America than they are around the world, just because of the maturity of the advertising market. But the theory is over time that ARPU, average revenue per user, in these other international regions will increase. And that's why some of these companies are valued at such a high price sales basis. And so if we go to Twitter's, I love this right here. Twitter actually has a data and licensing and other revenue line. They license their data, not advertising. This is interesting because I don't think Snapchat or Facebook break out revenue like this or have revenue like this, but Twitter always has. It's actually pretty good and growing nicely for them. 125 million up from 107 million. So nice growth in that data licensing revenue, but the advertising revenue has taken a big hit. Once again, that seasonality I was talking before, Twitter, Q1 the weakest, Q2 a little better, Q3 a little better, Q4 is always monster. This is a trend for advertising. Facebook, Google, always this very, very strong Q4. Twitter is the same here. But as you can see, Twitter, let's comp this versus Q1 last year, 682. 679, barely any growth, like less than 1% growth, it looks like here in the advertising revenue. And so, that just shows you that even despite, users being up, 15, 20%, advertising revenue is basically flat because of those CPMs. So that is what it is. Profitability. Twitter has really been turning things around recently and went from losing money to being really profitable, which is awesome. They sort of had a problem with their advertising system here, which hit earnings. And then we've had COVID. And so that really hit earnings in Q1. So I don't know, overall 786 million Q1 last year, 807. They were able to grow mostly because of that data licensing revenue, but profitability has been hurt. And so that is what it is. Net income, we got margins here. Let's look at the cash flow at Twitter, scrolling down here. This is a chart I love to see how much cash the business is actually producing. So as you can see, operating cash flow from the business, and then we have expenses. That gets us to the free cash flow. How much business is the actual core business pumping out each quarter? Twitter's pumping out 124 million. So you might be like, why is Twitter pumping out 124 million in free cash, but their profits were negative last quarter? Well, because there's about 100 something, probably 150 million of that is stock-based compensation. They're not actually paying cash for that. They're just issuing new shares on paper, diluting the share count a little bit. And so that's why oftentimes in a company, you'll see a gap between the earnings and the cash flow. A lot of that could be stock-based compensation, depreciation, amortization. There's a lot that goes into the accounting games there, but the actual business of Twitter is pumping out $124 million last quarter. I mean, that's pretty awesome. And if you look at the cash on Twitter's balance sheet over time, this is another really powerful trend I like to look at. It's like, okay, you can tell us you're making money, you can change the cash flow, you can do weird accounting stuff with your income statement, but it's very hard to fake money piling up in your bank account over time every single quarter. If I see that, Tesla has had that too, now that they're profitable, it's like this business is making money. It's hard to argue about it. And so Twitter is the same thing here. The cash flow has been extremely strong. They're ending with over 7.7 billion in cash. They've also recently partnered with that weird thing. They tried to kick Jack Dorsey out. They ended up, coming to terms with these different big investment funds, but agreeing on basically a mega buyback for Twitter, a share buyback. And if you look at Twitter's shares outstanding, they've been increasing, that dilution I talked about, that stock-based comp, but it looks like this might start to reverse a little bit as they deploy some of this 7 billion in cash to reduce their outstanding share count. And now let's get to the fun of HyperCharts. At the top here, we got a little number, market cap. How much is the company worth? So look at all these numbers. We can see all the metrics that Twitter has as a business, and then we can decide, well, the market is pricing all of these metrics at 22.1 billion. Do we think that's fair or not? Well, anyway, I'm getting sidetracked because the buyback point I wanted to make was that with 7 billion in cash on its balance sheet, let's say Twitter puts 4 billion to the buyback. Their market cap's only 22 billion. 4 billion would be enough to buy like almost 15 or 20% of their share count could be reduced immediately by just buying back $2 billion worth of stock here. So Twitter could materially reduce its share count over time, and that's a huge way to potentially drive value to shareholders. I know buybacks are getting a lot of heat in the media because airline companies messed them up, but I'm actually a big fan of buybacks when done the right way, and I think Twitter is a company that has consistent positive cash flow for years and years and years. They've constantly been diluting shareholders, which I think is really not a good sign, and cash is just piling up on the balance sheet while we're getting diluted. It doesn't make sense, and so I'm really happy with this new share buyback, and hopefully what that's going to result in is in the next few quarters, we're going to see Twitter's outstanding share count over time here start to come back down. So this is HyperCharts. This is why I love it. It breaks down all of my favorite companies. Now let's get into some, a little bit of unique new features that we came out with recently, just for fun. You guys all requested dark mode, which I think is pretty awesome here. And so now I went into dark mode, and as you can see, like I can go to Zoom, everything's in dark mode. This makes it feel a little more Bloomberg-esque, so I love this. And in case you didn't know, one thing that's super helpful for me when I make charts, maybe not in HyperCharts, a little more complex, but want to use this data, I have HyperCharts Premium, $10 a month. Some of the amazing features from that is I can just click, bam, downloaded all of that data into an Excel spreadsheet instantly. Or I can go to this, I can go download an image version of the file. And this is pretty useful as well, because if I want to put it in my newsletter, or if you're a blogger, I can just, bam, now I have the chart, the image version of that file of whatever chart on HyperCharts I want. I can save that, download the data. I can also click on this chart mode to just literally see the values that HyperCharts is plugging in. So much cool stuff here. Actually, another thing that I want to show you that we launched this quarter, which I think is awesome and seems small, but has really been helping me in my analysis, is percentage of revenue. So let's go to Apple here. We're on Apple annually. Apple, 1.3 trillion. Wow. So Apple's got a bunch of different revenue segments over time, and it's very interesting to see how Apple's business has transformed as the company has matured. And so to see that, this is just raw numbers, their revenue. We can go as a percentage of revenue, they're different pieces of the business. Love this. So you can see the iPhone, at first it was the Mac. Hard to believe that that was 32% of the revenue and other. And then all of a sudden we have the iPhone that just becomes a behemoth in 2015, hitting 66% of overall revenue. This was a single product company. Apple sells a ton of stuff in its stores, but really the iPhone is the cash machine that took Apple to the top. And now recently the iPhone's been strong, but as a percentage of revenue has been going down to 54%. I would say this is a good thing, because what you're seeing is that green line, services, is starting to become a bigger and bigger piece of the story at up to 17% of revenue in the latest year. And we can remove this here, and you can see as a percentage of revenue over time, service has gone up 13%, 14%, now 18% of Apple's revenue in the latest fiscal year. Let's look at other, because other had services in it, then they backed out services in fiscal 12. That's why it became its own segment, and this shrunk. But here you start to have Apple Watch and then AirPods. And this has gone up to 9.4%. And so wearables is now driving growth of Apple's other business. And so I think this is a really interesting way to look at it. Now, if we take out percentage of revenue, you can be like, well, the iPhone isn't looking too strong, kind of matured here and looking flat. But then when we throw in other, it looks stronger. Throw in services, it looks even stronger. And so Apple's been figuring out ways to monetize its business other than the iPhone, and that's where it's getting growth. And we can get all that insight from this chart on HyperCharts. Another awesome feature that I use all the time, calendar. You can sync your calendar for company earnings. A lot of companies have already reported, but like Wix is about to report. So these are all the companies that are on HyperCharts that are about to report. Here are all my favorite companies. I guess Arcimoto, Neo, and Zoom all coming up, still haven't reported their Q1. So this is awesome, and I can sync it to my Google Calendar if I want to be reminded. Oh, another awesome feature we added was compare mode. So compare mode, we've had this for a while now, but let's go to Uber and Lyft, two companies. I think this is a good one to check out. Uber and Lyft. And you can compare any one feature, or you can go all, which I think this is the new thing we added. And it's really awesome. So you can just scroll to these two companies, see what we're going on. Uber, way bigger business, higher expenses, operating income. Lyft is losing less, which is interesting, even though Uber makes more money. And then we can scroll down here, gross margin. I think this is where we start to get a lot of insight. And it's going to depend which companies you're comparing, which metrics are useful to look at. But to me, how much profitability is each ride. It's interesting to see that Uber's maintain kind of structurally a higher gross margin here at around 50% versus Lyft in the low 40% for gross margin. That's pretty interesting. Maybe that's why Lyft rides are always cheaper. Then we can see operating margin as well. This got messed up because the company's IPO'd, but you can see that consistently over time, although Uber's losses are bigger, their losses as a percentage of revenue have always been smaller than Lyft, and Lyft has actually been a less profitable company over time. Another one I wanted to compare really quick with you guys, Disney and Netflix, because these are often, of course, rivals. I always say Netflix is trying to become Disney as Disney is trying to become Netflix. I love that. And so, Netflix, a lot more consistent revenue growth here. That subscription fees really nice and even. Disney, way more revenue, way more gross profit than Netflix, but way higher expenses. What does that result in? If we actually go to operating income, Netflix here in the blue is actually almost as good as Disney. In Q1, Disney's getting crushed. They have to, they're investing crazy in content in Disney Plus. The cruises, nobody's going on cruises. Nobody's going to the Disney parks because of, shelter in place. And so now it's interesting to see that even though Netflix, way smaller revenue, way smaller gross profit, it's actually almost as profitable as Disney. And I mean, this chart speaks for itself. Disney kind of coming down, maybe just because of illness 19, but it looks like it was even a little before that. And Netflix coming up. So Netflix could actually surpass Disney in profitability, probably in Q2, because Q2 is going to suck for Disney. So I think that I was not expecting that, but when I checked under the hood, I was like, wow. And people are like, oh, well, how is Netflix worth almost as much as Disney? Well, first of all, here's another chart of this. The operating margin, profit margin of the companies, Netflix going way up here, way higher, 16% in last quarter versus 7% for Disney. And over time, the trend is pretty clear. If we also go to revenue growth, well, this is going to be a good one. Netflix, way higher revenue growth than Disney, although Disney did get a bump here, but that was because they acquired Fox. That wasn't like core organic growth. So important to keep that in mind. Also, then the market cap. So Disney here worth almost double Netflix. I don't know if this is exactly up to date, but Disney worth significantly more than Netflix. 50 to 100% more, despite the fact that it looks like Netflix profit margin is going up, looks like Netflix profits are going to be higher. So when you talk about the high PE ratio right now, when you talk about the valuation, we talk about what Disney has versus what Netflix has, it seems like a no-brainer that Disney should be worth more. But when you get under the hood of these financials, I think the case, it becomes a lot more complex of a debate. That's my wrap up for earnings season, Square, Twitter, and HyperCharts. I hope I gave you guys a good tour of the platform. Huge shout out to Mo for working on this. We don't even get paid for HyperCharts, but we've actually started to hire someone else to help us input more data and expand. That's why we've been able to add more and more companies. So huge shout out to those of you guys who are premium users. I'm a premium user myself. I even pay for the service. And I love it. It's $10 a month, and you premium users, we're not getting paid, but we're using that money to invest in new features and new companies. And that's why we've been able to go from 5 companies to over 100. We've added all these new features. HyperCharts, for me personally, I think there's a learning curve. You got to get used to it. But over time, I find myself probably 3, 4, 5 times a week checking HyperCharts, playing around with it for hours. And I just absolutely love it and still think there's nothing like it and think it's such an amazing resource. So I'd love to know from you guys, do you use HyperCharts? Do you find it interesting? Was this helpful? What could we add to make it better? I'd love to get all of that feedback from you. Anyway, let me know what you think in the comments below. This is HyperChange. I'll see y'all next time. Peace.